Sorry about that. So the second example is of Egg Batista, self-made Brazilian billionaire, created an empire stretched from oil to mining, net worth about 35 billion in 2012, and his net worth was zero at 2014. So he is known as one of the fastest wealth destroyer ever. Okay, so so if you guys have destroyed your wealth, so I mean you can compare. I mean we are nothing in front of him. Okay. So 2018, he was convicted for bribing and he was sentenced for 30 years of imprisonment. So so these are the two, I would say, these are the two individuals. Okay, what is the difference between them? Okay, so I mean, this guy is, of course, knowledgeable. Ike is a knowledgeable guy, educated, and the other hand, and she is like uh, average citizen, okay, and still she was able to give $22 million in charity, okay. So from this example, we get to know that managing money and wealth as an investor or business is not about knowledge, okay. It has something to do with the behavior, okay. So whatever money you are earning, whatever knowledge you have, that doesn't mean that you are going to, as an investor, you are going to do great. Okay. So that was related to our poll. EQ is very important when you are related to investing, when you do any investing, then an IQ. Okay. So Warren Buffett says if you want to be a good investor, you need 99% EQ and only 1% IQ. Okay. So if we compare with the other professions, so if some take an example of a doctor or a surgeon, can a fresher beat a 15-20-year-old surgeon in the skill? No, I don't think so. It's never possible. Can a programmer and start? I mean, just a fresher can beat a 10-15-year-old guy who is into IT and he's doing good in IT. Can he beat? No. Any other profession you can, any profession. But the investing is the only profession where a starter or maybe someone whose behavior is good can beat anyone. I mean, the person who has got a great knowledge. Okay, so he can beat that. So that is very important. So that one person has to take care while doing any investing. Okay, so let's get into topic. What is financial freedom? So is the financial freedom is related to having a lot many car or maybe bungalows or maybe uh, wealth? Okay, is it related to that? That will get to know. That will get to know in another side. So there is a thing called affluenza. Okay, what does affluenza say? So Will Smith has given this statement. We spend a lot of money that we do not have on the things we do not need to impress people who do not care. So this has been a trend, especially with millennials, also in our generation. Of people try to impress other guys with doing show off of what they have got. Okay, so they've got a small car. Someone who has bought a bigger car, they will try to again beat that person with a bigger car or a smartphone. And there are a lot many things. House. I mean, they want to impress someone in a society. Okay, which people don't care about. Okay, but yes, that is there. The peer pressure is there. So that is actually called affluenza. They try to show off and impress people. This is the word given to it. Okay, so there is called hedonic treadmill. So the tendency of a human to quickly return to relatively stable level of happiness despite major positive or negative event of life. So this is a tendency. I mean, people. So if you have for example, you have a small car. Okay, you go and buy a big car. Okay, you will be happy for small period of time. Okay, or something bad has happened to you, so you will be sad for a smaller period of time. But ultimately, I mean, after a few days, you come back to the same what you were there before that event has happened. Okay, so So there is no end of liking. So if you buy a 20,000 rupees phone, you feel like, why not? Someone is next to you is buying 40,000 phone. You will feel like buying it. When you'll have that, and then again someone else has got the bigger phone. You will feel like having that. But ultimately, your happiness will again come back to normal, which is your true nature. Okay. So as the person make more money expectation and desire rise in tandem, which results in no permanent gain in happiness. So there is no permanent happiness and permanent gain. Okay, in happiness, basically you keep buying things and ultimately you come back to the original state. Whatever. I mean, if something bad has happened to you, you come back to original state after few days. Okay. So this is a phenomena. This is a human behavior. Okay, so that is linked to your financial freedom. Okay. So let me tell you the secret. So what is the secret of financial freedom? So it's not about having a lot of money. So if you why it is not it's not about having a lot of money, because when you have a bigger car, you feel like having much more bigger car. If you have that uh, fleets of car, then you'll feel like having a bungalow. If you have a bungalow, then you feel like having something else. Okay. So since your desire keeps on increasing day by day, your desire doesn't get fulfilled. You keep working for it. Okay. So if you want to buy a bigger car, you cannot sit at home. You have to work hard. Okay. So financial freedom is not about having a lot of money. Okay. So a lot of money again will give desire to another buying something else. Okay. So you will never feel enough about money. Okay. Now take an example of Mike Tyson or Boris Becker. They were one of the richest sportsmen. Okay. So they were bankrupt a couple of years back, few years back. They declared bankrupt. Why did they not have a lot of money? They had a lot of money. But what was the problem? They were spending like hell. I mean, Boris Becker, if taken a Boris Becker or Mike Tyson, his expenses was like unmanageable. He couldn't survive the expenses, what the lifestyle, what he had. Okay, so they had to go through all these problems, and they ultimately had to declare bankruptcy. And there are many more. I mean, there is no end to this list. Okay, so they were all rich. I mean, it's not that they were not earning much. Okay, so they all were very rich. So richness has nothing to do uh, uh, with the financial freedom. So what is financial freedom? Freedom, as you know, that ability to do anything. You are free. What you want to do, that is a freedom. Financial freedom is doing with, I mean, ability to do anything without worrying of the finances. It's as simple as that. So power. So Marcus, who's a Roman philosopher, has said power to live as one wish. Okay. So what you want to do in your life without worrying about the time, without worrying about the finances, without worrying about anything. Okay, this is what financial freedom is all about. Okay, so in short, I would say that financial freedom is all about what you want to do, and when you want to do, where you want to do, and with whom you want to do. Okay, so this combination of all the four intersection, there's a gray area. I mean, so that is where your happiness lies. Okay, so I would say that, I mean, from my personal experience, well, since I retired 2 years, but a lot of people here, they already know that I retired. Not, I would not say that retired. I got a financial freedom 2 3 years back, and right now, I mean, having ample of time, okay, with me, is like heaven. I mean, I cannot say that the kind of life you can enjoy when you don't have to worry about any timings. I mean, I don't have to worry about going to office at any time. I do meditation. I do cycling whenever I want. I If I don't want feel like working, I just shut down my laptop. I do reading. So these are so precious moment, which you guys when only be able to when you will actually come to that place, then you will understand it. But I believe me, I am telling you, having control of your time is one of the best thing you can ever have. Okay. So there is no nothing that you have to worry about you have to work on this schedule. Okay, you have control of your time. Okay, so Charlie Munger did mention that I did not intend to get rich. I just wanted to get independent. Okay, so financial freedom is basically having enough financial resources to be able to complete control, to have complete control of your time. Okay, so you don't have to be a millionaire. Okay, you don't have to be a billionaire. You need to have enough financial resources where you can say कि yes बस ये इतना हो गया मेरे को अब I should be able to take care of uh, my family, myself throughout my lifetime, and I don't have to worry about it. So why it's having enough financial resources is because if you think that I need to have need to be rich, I need to be a lot wealthy, then you keep on working it. Okay, there has to be some at some point you need to say bas abhi ye bahut ho gaya. Okay, until unless if you don't say ye mera bahut ho gaya abhi, this is I have got enough, you will keep working on it. Okay, so that need to come from you that first I need to stop at this level. Now for me, my time is more important. I need to live my life. Okay. So any questions? Then let me know. किसी के पास कुछ हो questions, so let me know. But okay, so number one, how to achieve. So you got everybody. I think got an idea what is financial freedom. Any question on that? What is financial freedom? Basically having enough money to be able to survive throughout your life. Okay, more than enough, little bit more than enough, but there has to be some you have to stop at some point. It's not that you can keep going making money forever. Okay, at some point of time you have to take hard decision ki bas mere ko itna ho. Okay, so if any question, then let me know. Otherwise, I'll start. So now you know what is financial freedom. Now the second step is how to achieve that. Okay. So the most important thing to achieve, I mean, the most important point where you can achieve a financial freedom is by frugality. So what is a frugality? Living within your means. So for example, you are earning a lakh. So you should make sure that you save at least 10-20%. Okay. And then and I mean, if you're earning 10,000, make sure you save 2,000. I mean that's a habit. I mean, the person who is not able to save when he's earning 10,000, he will never be able to save when he's earning 1 lakh. Okay, so that the behavior doesn't change. Okay, so I have seen people whose salary has doubled, tripled. Okay, but still they are struggling I mean, in the month and they don't have money to spend. Okay, so they are every time they are just running out of money. So frugality is very important. How much you are earning, you have to invest something. I mean, you have to invest some portion of it. Whatever you earn, 5,000, you earn 10,000, you earn 20,000. You need to develop those attitudes. Okay, so you have to live within you. So investment returns have a potential to make you rich, but the strategy would work for how long it's always in question. So basically, you don't. So you can be a rich by investing, okay? But do you have control over the investment? No, you don't have control. There are a lot of other things where it is dependent. So the only thing you can have a control on is your saving part, okay? So the amount of money you can save from your your income. Okay? So personal saving and frugality are part of the money equation that are largely in your control. So that's what I said. It's in your control and have 100% chance of being effective in future as they are today. Okay, so that habit has to be developed as soon as you get the first job. Okay, and then that habit will keep till the end. Okay, and then automatically I'll tell there are few more things to do when you will follow those steps. Definitely you will achieve it. There no one can stop. Okay, so whatever I am telling you in this slide, okay, if someone follows it, definitely there is chances of failure is negligible. Okay, someone has to be having very bad luck, then only he cannot attain a financial freedom. Okay, so 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 A is some, for example, A is earning 8% return on the investment, okay, and B is earning a 12% return on the investment. So after 20 years, that so the 1 lakh invested would be 4,66,000, and B earns 12%, so it is 10 lakh, almost 10 lakh after 10 years. So who will be more happy? Okay, let's see. So so A has need of 20%, whereas B got a need of 80%. Okay, so who will save more? Of course, the person who is A, whose needs are less than needs of B. Okay, so B is not able to save even if he is earning more. Okay, but still is not able to save more because A has got the lesser need. So it is very important to cut down on your needs. So I'm not saying that you shouldn't do any spending. Okay, but you have to. So as per your income, you need to have some amount, fix some amount you should save always at any cost. Okay. So, so I don't know, people understand this word opportunity cost. So this is actually I have followed in my life. When in the first car where my friends were buying a bigger car, okay, I'm talking about 10, 15 years back, I decided to buy a second hand car. Okay. So what this picture shows is like if you are buying a Creta, okay, where you actually can work. So you're based on your family and all, you should be okay with Sandro, okay, but you buy a Creta, you lose on the opportunity to buy a Mercedes or maybe BMW 15, 20 years later. Okay. So I'm not saying that you shouldn't buy a car. I'm not saying that you shouldn't enjoy your life. What I am saying is, if you can delay your gratification, okay, if you control your expenses, it's something you can control and you still be happy and your work is going on, you should do that. Okay, so you don't need a Creta right now. You need a Centro, and your life will go along. You have a small family, then don't go and spend 12 lakh. Let 7 lakh compound over 15, 20 years. Okay. So so again, I'll come back to example. My example, I am able to buy things which I was not able to buy when I was working, and if not able to buy, I would say I was not willing to buy. I delayed my debt. So right now, after retirement, I'm buying all those things which I didn't buy when I was working. My income was going on. Why it was possible? Because I did all my gratification delayed for a few years. So I'm not telling to stop any expenses. I'm telling you to cut down. Okay. So another example, if someone, so I know few people who spend 250 to 500 bucks every day, or they smoke every day. They spend 50, 60 rupees, 100 rupees on every day on Starbucks and smoking. Okay. So if you basically save this 250 per day, okay, after 10 years, you can have 2-3 months of world tour. Okay, for 20 lakhs. So now again, people will say you are stopping everything. I'm saying don't. So if you want to go to Starbucks, don't go every day. Maybe you have a coffee thrice or 3 or 4 times a week at home, okay, and cut down your. So I'm not telling totally stop, but I am against people who are uh, spending every day on this. So see, 250 rupees coffee a day, one coffee a day, like, and 20 lakhs, this money can become 20, 25 lakhs after 10 years. Would you believe? And I'm taking the interest rate is very achievable. I'm not taking 20, 30%. Okay. So road to financial freedom. So there are two ways you can achieve freedom is you can reduce your need. So once you reduce your need, your saving goes up, or you increase your income and saving goes up. But this is more in your control, reducing your need. Because here, if you increase so if you are not able to, manage your expenses, and you are not able to save when you're at certain income, there is a unlikely that your income will increase. You will be able to save more because your expenses are running ahead of your time. Okay. So as and when I mean I've been working, I know a lot of people. In JP Morgan, we used to get bonuses in January. So they used to plan prior to when bonuses was due. Okay, they used to plan in advance that I am going to get 2 lakh, I am going to get 3 lakh, so I'll spend it. So they used to book car prior to bonus. I mean, bonus used to come. So that kind of planning was happening. So it is very important you reduce your needs, then income, and this is not in your control. Income is not in your control. This is the control of company, control of which job, it's control of your performance. Okay. So the first point is over. The second most important point is debt. So you should stop having any expensive debt. So the only, as per me, I have not taken any debt other than a car loan. A car loan which I took it why because I was getting it very cheap because I was the company I was working with. So that even that I would say avoid car loan also. But I took it because I was getting very cheap. Second is home loan. Other than that, I don't think so it makes sense to take any debt. Personal loan is strict loan. You shouldn't have come into that situation where you need to take a personal loan. If you are taking a personal loan, I would say, I mean, you need to work on your expenses. It's a case-to-case basis. It's not a general statement. But apart from home loan, one should avoid taking any debt. Okay, credit card debt is a crime for me. Okay, the credit card they are like charging 18 to 30%. It's a crime. Okay, for me. So try not to take any high debt. Okay, no, don't take any money from your friends. Okay, so because if you keep taking money from your friends, it becomes a habit. Okay, and it keeps on going on. So you repay one and you will take it from someone else. Try not to take even at zero interest rate from anyone. Okay. So I in my life have not kept this option in my mind. And subconsciously, there is no option for me to take money from anyone. There is my mind cannot think on it. That option is not there. Okay. So this is basically a Russian roulette game played in Europe. Okay, what game it is? Basically, they say that there are 6 chambers in the revolver. So they said they'll put in one they'll put one bullet. Okay, and they say and they'll just say Sholem that guy revolve it right and try to say that if you win, okay, then there is chances only 80% chance or maybe 90% chances that you will be saved. Okay, so if you get killed, you get killed. If you are so even if you killed or not, they will give you $1 million. So that game is being played there. Okay, so the person has to hit the revolver in their head. So if he survives, he'll get $1 million. If he doesn't, then still he will get $1 million, but maybe he's nominee. So people are, in real life they play this game. Okay. So people who are playing futures, options, they without understanding anything, they are playing the Russian roulette game. People who are taking a high debt, they are playing this game. Okay. So even if people who are buying stocks in tips in SMSs or maybe some friends told not proper. I mean they are not going to proper advisory and they are just random. Some friend told कि buy stock buy karo, some SMSs. They are playing this game only. Even if they succeed, they got succeeded by playing this game only. Okay. One day they will hit their head. One day there will be a crash and this bullet will hit them. Okay. So there is no difference between people who are playing future and options without knowing they are buying stocks, without knowing anything with whosoever tell. Okay, and the SMSs and all, they are just playing this Russian roulette. Okay, so even if they have been able to make money, but they have made money the similar way this guy has made money. Okay, one fine day they will, and they are playing it continuously. One fine day their head will be they will shoot them, and everything. So when that money will go, when there will be crash. Okay, so this all penny stocks and all, they will go to dot zero. Okay, so then actually bullet will hit there. So please take care. Don't play this game. Okay, so you are winning it. That doesn't mean you will win forever. Okay, one fine day you will hit your bullet, hit your head. Okay. So Napoleon definition of military genius is person who can do everything when everyone around is losing money. So basically, the crux of financial freedom, crux of investing is you have to do average thing throughout your life for 40, 50, 60 years. What Warren Buffett has done, he has compounded at the rate of 18-20% for 75 years, 75 years. He started investing at the age of 13, I think 11 or 13. He has compounded for so many years. Okay. So if someone would have compounded here in India for 78 years, he would have also be one of the richest men in India. Okay. So you have to do everything. You don't have to do something very silly to actually become a wealthy guy. Okay. You don't have to make money at 25% CAGR, 30% CAGR. Then you are playing a Russian rule. Okay. Don't play Russian rule. The third important is about investing. So never depends on single income, invest to create second source. So I always, I came from a business family. I wanted to, we had losses and we shut down our businesses. Then we moved to Bombay. I wanted to do business still after doing job. Then I met a few people and financial planners. And then I realized that when we invest into stock market, we invest into mutual fund, we are actually investing, we are doing business. Okay. So not many people realize it. When you are buying a stock, you become a partner of that company. How short it is. Okay. So you become a partner of, and you become a businessman. So if you buy a stock of Reliance, you become a partner of Mukesh Ambani. Okay. So if you buy a Tata stock, you buy a partner of Tata. Okay. So become a partner of this business, good business. So if you can't do it, give it to someone who is expert in it. Give it to mutual fund. Okay. So I was doing investment 15 years non-stop. I have never stopped my SIP since last 2006-7 I started. I had never stopped my SIP whatsoever. I had a lot of problems in between, but my SIP money used to go first, and then I used to spend. So 15 years continuously I started. In later years, like 5-6 years, I was like investing 50-60%, 70%. I had my own home, so my expenses EMI was less. 50% I was investing, 60% I was investing. Okay. Ideally 10-20% is good, but I was investing 60%. So then I became a partner. I was a businessman. Okay, so still now I am a businessman. I was getting the share of all the companies. Okay. So the compound interest formula, this is, I think we learned when we were in third, fourth, fifth, I don't remember, but no one took it seriously. I think it's the most important formula. I think for me, it is the most important. Okay. So most of the people know, they look into this R. R is return. Okay. But no one take care of, no one give importance to T. T is what? Time, the number of years. Okay. Everybody is worrying about R. They want higher return. But they have to spend a lot of time in this. T is no one is focusing on. So that should be your key focus. R should be okay. 10, 11, 12%. You just have to beat every with 3-4%. But time is very important. You have to be in. So just like test match, why Pujara is always picked in the test match, he doesn't score. R is almost 1-2, or maybe R is one of the most the run rate, or maybe the runs he scores, the average is very less for this guy. But time he spends, he is there in the field. Okay, and automatically runs come. You have to be there in the field. So that's what T is very important. People don't understand why the importance of T. You have to spend time in the field. People don't spend time. Okay. Okay, so this is the most important sheet of all the sheets. Okay, you so, see that closely. So this is basically a 5,000 SIP. Okay, first for 10 years, 20 years, 30 years, 40 years. Okay, so this is 6% CAGR, which is a traditional insurance policy or RD or FD gives. Okay, here it is uh, here it is 12%. Here it is 14%. So 12 and 14 is basically stock mutual fund PMS scheme. So see the difference of the amount of wealth you can create. Okay. So see, if you invest 5,000 for 10 years per month, 8 lakh will be created for FD, 11 lakh for 12% and 12 lakh for 14%. So returns, they're not much of a difference. But look at when you spend so much of time, if you spend 40 years, 96 lakhs for FD, RD, and 5 crore for 12% and 8.7 crore for 14%. Look at the difference. The more amount of time you spend, and I mean, compound interest is what your mind cannot comprehend. Even if I understand this formula, someone randomly asks me, my mind is not able to judge it. What could be the figure? You need a calculator. Okay. Similarly, if you invest 10 lakh lump sum, 10 for 10 years, you make 17 lakh 30. I mean, for 10 years is okay. I mean, not much of this. Look at the difference when you invest for 40 years. 10 lakh is invested for 40 years. You make 1 crore after 40 years in FDRD. You make 9 crore in 12%. And look at 18 crore, 2% difference. 12 to 14, 2% difference. And see 9 crore difference over a period of 40 years. Huge difference when you spend a lot of time. And this is very important. So I mean, the government says that our inflation is around 6%, but I say we have inflation of 8 to 10%. Why? Because we have so we also have inflation. We also have a lifestyle inflation. So people, I mean, we used to buy at 6,000, 10,000 mobile 10 years back, but now we buy 30,000. So it's not that the same mobile we are buying it costlier mobile. We used to go by train, but now we are going by train. No, we are going by a flight. We used to go by a auto rickshaw. Now we are going by car. So basically that inflation plus, so if we go by auto, then we can say we have a 5-6% increase. But we have increased our lifestyle as well, and the inflation is also there. So if we say 8-9% inflation and we invest in FD, okay, for 10 years, so actually our money get decreased. So 8 lakh. So I am adjusting this inflation. So your money is increasing by 8%, increasing by 6% and decreasing by 8%. So you 5,000 per month for 10 years will give you 5.4 lakh. Okay, it used to give 8 lakh before inflation. Important is this case, you'll get to understand this. 10 lakh invested for 10 years, okay, it will become 8.2 lakh. Matlab your the money value is going down. 10 lakh invested, but your money is actually after 10 years you're getting 8.2 lakh. Why? Because your money is growing by 6% and it is reducing by 8%. So take it, if you want to try this, you try it out. You want to buy a 1 lakh rupees motorbike. You put that 1 lakh in FD. Okay. 5 years down the line, will you be able to buy whatever you get from out of FD? Will you be able to buy a bike? No, I don't think so. So beware. I mean, this debt is also important, but don't. If someone is putting all their money in debt, this is what they are going to face. For 10 lakh after 40 years will become 4.7. Actually, this is the case. I mean, this is eye opener. So let me see what's the time. Okay, we are running out of time. So net worth of Warren Buffett, if you see, this is how compound interest works. The more the time, the more. So in later stage, you make hell lot of money. Okay. So this is again, I mean, the compound interest is the 8th wonder of world. He who understands it earns it. He who doesn't pays it. So it's about compounding interest. The first rules of compounding is never interrupt. So if you are selling, I keep telling a lot of people don't get out of. I mean, people try to time the market. Market has gone up, so let's sell it. Okay, but no one in the world knows whether it's the right time to get out of market. They get out of market and market goes up. They basically, and then they use their money is there in your account. Use it to somewhere else, and that impact is huge impact. You remove your money from mutual fund and you spend somewhere else, and you think that you will be able to manage it. After 10-20 years, of impact is huge. Okay. Another most important thing is an inactivity. So people are very active and people are keep watching their mutual fund. They keep watching their shares. Okay. And what happens now when you keep watching your mutual fund? What is everyday NAV and stocks of every day? What is the price of the stocks? You tend to create a behavior, wrong behavior. Okay. That I have experienced it. And believe me, I have uninstalled all the mutual fund app, all the trading app, nothing I have in my phone. Make it difficult for you. So I have read one book, Atomic Habit. There is here mentioned. Make it difficult. If you want to remove any habit, make it difficult. So I made myself difficult. I now I'm not. It's very difficult for me to check all the stock price because I have removed all that. There is nothing in my life. So inactivity is very important, and that is when you regularly watch TV or maybe your mutual fund, you are not inactive. You tend to make some error. So Fidelity did some research between 2003 to 2013. Who are the best investors? Okay, so in the research, with 10-year research, the top two investors who had made money. Second investor was the one who forgot he had invested in Fidelity. Okay, so they contacted him. He said, "Oh, I had money with you. I didn't know." Second best investor. The first investor was dead. So they were dead, and the other guy forgot, so they didn't do anything. Okay, so this is how it is. I'm going a little fast because of time. So these are the average holding period of mutual fund investors. So people are trading in mutual fund as well. So 40% of people, they don't invest, they keep their mutual fund more than 1 year. Okay, within 1 year they withdraw it. So what wealth you are expecting to create out of it? Like, even if they are withdraw it, at least move it to some other mutual fund. I mean, that is a crime, but still lesser crime. Okay. So that is this is a statistic from MC. So fifth most important is a luck. So the harder I work, the luckier I get. So luck, again, the cricket example, you have to be there in the tree to get a ball of your like, and you can hit it. If you sell it, investment, you are out of the game. Okay. So when you are out of the game, you are not lucky. You won't get a delivery to hit. Okay. So it is very important to be. You have to be there in the game to be lucky, and you have to wait for a nice delivery. You have to. So if you will be there invested throughout 20, 30, 40 years, luck is going to help. But you are out of the market, luck will not help. So this is the most, again, the second most I would say, it's everything is there in this. The financial freedom is there in this. You earn, you spend less, and whatever you save, you keep investing over a time. Keep investing. Just forget it. Keep investing every month. Okay, don't track too much. Don't 15, 20, 30 years. You keep investing, and you'll make huge money. Okay, but I'll tell you, this is very simple, but it's it's not that easy. It's very difficult. I mean, I haven't seen many people who are investing for 15 years continuously without selling or without making any changes in their portfolio, or making some trading and all. I haven't seen. It's very difficult. But I mean, it's simple but not easy. This is very a simple thing, but people who are knowledgeable, they are not able to do it. People who got good knowledge, they say अरे यार म्यूचुअल फंड में क्या इन्वेस्ट करना है, ये तो जिनको कुछ आता जाता नहीं है वो सब, and then they try investing into equity and then they lose money. Investing into direct equity need a lot of research. I know how fund managers do the research. Okay. So it's not that very simple. Anyone can. So now everything is there. I mean, you got enough money, but you're earning enough money. But that's what I said before. You need to have a full stop. Okay. I would have not full stop it, then I would have not enjoyed it. Then what, when I'll enjoy? I'll enjoy after 55. When there is a health crisis, there can be a health crisis. So you need to enjoy your life when you are at good health. So this is what Joseph Heller is a writer. Okay, he was invited into one party, and in that party, his friend said, "Your friend has made in one day." Sujay Sharma, can you mute?
Mr. Sanjay? Mr.
Sanjay,
Sanjay, can you mute?
Sanjay, sorry. So basically, people tell, even Neeraj, you can mute him.
Actually, you have the control.
Okay, I have control.
Yes, sir. Thank you.
Okay, so yes, I mean, someone told him that your friend has made the money in one day what you have made in your entire life. He said, I know a lot of, I mean, I know that he doesn't know what is enough. He is keep making money, but you need to have hard stop in your somewhere in this stop. You need to stop. Otherwise, you will keep money. And when you will turn 50, 55, you will have time, but you will not have health. Okay, so it is important. So I'll read that quickly. It doesn't matter how much you earn; it matters how much you save. Okay, you are earning a lot. I mean, you are earning 5 lakh rupees per month, but you are not able to save. So save, you need to save. That is more. It matters how much you can save. It doesn't matter how much you save. It matters how much you invest. So you are saving maybe 50%, but you are keeping that in saving account. So that is wrong. So you have to invest that. So it doesn't matter. You are saving a lot, but you are not investing. It doesn't matter how much you invest. It matters where you invest. So now you are investing into traditional plan. You are saving a lot. You are investing but you are investing in some traditional plan of any insurance. You have to invest in the right asset class. It doesn't matter where you invest. It matters how much wealth you create. So you selected the right asset classes, but you came out of that asset class in 1-2 years. You have to be in right asset classes. You have to be for a longer period of time. Okay. It doesn't matter how much wealth you have created. It matters if it is available for you when needed. So you have invested in good asset classes, but your money is stuck. Okay, you have invested in the land. It's making good money, but your money is stuck. When you need money, you don't need. So your investment should be available for you when you need. Okay. So for that you need a proper financial planning. Which asset class, how much. So it's not that I am saying 100% you need to invest into equity. You need to have a balance of equity and debt also, because some goals are for 2-3 years. You cannot invest that for long-term, short-term investment in equity. You need to give enough time. Okay, so for financial planning, is basically will ensure you get right amount of money available at right point of time. Okay, so what all things comes under financial planning? Insurance, water.
Kapil, can you mute?
So yeah, so basically, so you need to have a contingency fund, your retirement planning. Okay, so how much money you need for a retirement. So these all things will let you know how much money you need and when you can say enough. Okay, how would you know that what is enough for you? So you need to have a proper financial plan. Okay, I was able to stop. I was able to stop at my age of 41 because I know how much money I'm going to need. What is my lifestyle? How much more money I need? Okay, so it is very important to know how much you need. Then only you will say, now I can stop. Okay. So insurance planning is important. All the risks should be covered. Investments planning, like based on your goals. Okay, what are your goals? Based on short-term goals, you need to be in debt. Long-term goals need to be in equity. Cash flow management. I mean, every month expenses should be taken care. So these are very important to actually know what is enough for you. Okay. So this is how we plan. So we first meeting, what we do is we do a client information gathering. We get all the information of insurance, what are the goals, what is the income, what are the expenses, what are the where are the investment lying. Okay, and then we establish a goal. What are the objectives? Based on objectives as well, we analyze finances, and we map it to the goals. Okay, and some of the investment we suggested to stop, and we move it to something else. And then presenting a financial plan, helping client to implement it, and then keep monitoring every year or some changes, any changes in their life. Okay, so this is how we do a financial planning, and it is very important to be able to know what is required for what purpose. Okay, then only you will gain confidence कि हाँ बस अभी बहुत हो गया अभी काम करके, now this time I can stop. Okay, so I mean, this financial planning process, I mean, this is only required for people who have enough for saving. I mean, someone who is not saving, is struggling to save. First, they have to build a habit to save. So then once that is there, then financial planning. Also, one of the important things is not about gathering the amount of money. Also, just developing a skills, where you can retire and you can do that. So right now, I have developed the skill of finances manage. I am managing people's money. Okay, so that I'm not getting the amount of money I used to get when I was working, but I am getting enough. I'm earning enough. Okay, so that is also helping me. So you need to develop a skill when you actually want to retire. Okay, so that you are occupied and you are. It will be great help if you earn 30, 40, 50,000 a month. It will be a great help. Okay, you can easily retire. So these are the recommended books. You should read it. I would say Psychology of Money and Almanac of Neville Ravikant is one of the best books I have read. So Almanac of Neville Ravikant I am reading right now. It's one of the best books. Rich Dad Poor Dad is old book and it is widely used. So these are the two new books which I am reading. I have read this. I am reading Almanac. Very cool book. It touches everything, every aspect of life. It's quite good. Secret of Millionaire Mind is basically it tells you that you are about your mindset. What it's saying is that what you are is all based on your mindset, what you think. Okay, you should think something very positive, very effective, and something. I mean, if you think something, you'll try to achieve. It's all about. It's also a good book to read. Thank you very much. Any queries? Please let me know. We are within 5 minutes. I have to run inside. Any questions?
Mr. Darshan, I think thank you for such a wonderful presentation. And I think one common doubt everyone has is like whenever we also, when we get people for financial planning and all, what they ask is basic question is, you are asking us to compound for next 20 years, 30 years, 40 years. So when do we enjoy that money? Okay. So is there a possibility when we have some midterm goals, we can withdraw some amount from that pool of amount? So what should be the mindset basically and how we should approach that? That is the most common question we get that. So if you can throw some light on that.
So basically, whatever money you need, you can plan for it. So for example, you want to buy a car, so maybe 10, 20 lakh car. You can plan that. I mean, I would say something you want to buy today or maybe 1 year down the line. I would say if there is a struggle to reach that goal, delay it for 2, 3 years, 4 years. Okay. And you plan for it. I mean, you start investing for that. Okay. And then, so I am not stopping anyone from enjoying their money. I mean, you should enjoy your money. Otherwise, you won't feel like earning. So I'm totally not believing in, and I am spending a lot after retirement. I'm spending a lot. So I should enjoy my wealth. Okay. So you should also enjoy your wealth, but something in the earlier stage. Okay. Something you can delay, you should delay. in earlier stage. I mean, I'm talking about you are just earning to 30 or maybe 35, and cut down on your. So if you buy, if you, I said the car example, if you want to buy a 10 lakh car, I think you are okay with 5 lakhs, then why not buy it for 5 lakhs? Let another 5 lakh compound for 10, 15 years. Okay. And in the financial plan, make it a goal that I want, after 10 years, I want to buy this and start investing. Once your goal is reached, you pull your money and you buy that car. Okay. Even if it is not reached to the exact amount, little bit, I mean, should be very close. I mean, if you plan. Okay. So everything can be planned. Every goals can be planned. And when you'll plan, you will get to know whether it is under my, whether I will be able to buy it or not. It will be like clear to you. Yeah, Vijay.
Thank you.
Yeah, hi Darshan. Ojas here. Thanks for the presentation. I think it was really great. For people who are investing, it was a reiteration that keep it for a longer term. You will make more profit, and people who are starting new, it was good for them. Start investing early. One question that I had was, I mean, most of the examples that you gave, or all the returns that you gave, were all mostly equity related sort of. I mean, it looked more like equity related. Can you give a couple of examples how we can diversify our investment apart from equity as well?
So why I gave it equity related? Because that is where your wealth grows. Okay, no other asset classes your wealth can beat inflation. Okay, so this is basically a financial freedom presentation. So where I need to tell everybody that what equity can do. Okay, whereas if you're talking about allocating into different assets, so what you can do is something which is uh, the amount of money which is required for less than 5 years. Okay, again, it's not a general rule, but mota moti, I would say. So the money you require for 3 to 5 years, within 3 or 5 years, you should invest that in that money into debt fund, or in the debt, not debt fund, in debt. So debt can be a ETF, PPF, RBI bonds, or FD. Okay. So if something is required after 5 years, then you can also do FD. Right now, FD is corporate FD. Right now, it is giving better return than the bank FD or maybe some other debt fund. So you can use this option, that option. Okay, and something that you need over and above 5 years, 7 years down the line, you can invest that in it. Okay, so if you say, if you need something before 5 years, and if you invest that in equity, and something like Corona comes, so your money is 50% of. So when you actually need that money, your money turns 50%. Okay, then you have to sell at losses and you have to withdraw that. So don't invest into equity for the money which is required before 5 years. Okay. So that's what I can say, but it's again not a very generalized statement. When we plan, we do a lot of stuff, lot of things. We also make sure that that person has, for example, net worth is 1 crore. So we cannot have 70, 80 lakhs in equity. We try to control based on that person's risk appetite, and so asset allocation is a lot of things: market condition, that person's risk appetite, goals. These 3, 4 things have been taken care, then we decide what asset allocation is. But mota moti, for now, you can say think that longer period equity, shorter period debt.
Thank you, Darshan. Hi, Vijay this side, Darshan. Thank you for your beautiful slide. That session was really very informative and is going to benefit us. Just one query which is coming in my mind is, you categorized investment into 2 different categories. One which is legacy, like investing into FD, RD, all these EPF, other things, because even EPF is giving you not more than 8%, 8.5%, what I believe. What is your take? Let's say I have a home loan. Okay, and earlier in my dad is that everybody was talking in a way like EPF का इस्तेमाल 2 ही चीज में होता है. एक आफ्टर रिटायरमेंट या तो आप हाउस लेते हो या तो बेटी की शादी. So, house, if a person who have already bought a house, taken a home loan and paying gracefully, and maybe down the line 5 to 7 years he will be debt free. So, what is your take? Should I withdraw my EPF right now and pay that whole amount into home loan and get rid of all this debt, and then start paying, start saving, that portion of amount in somewhere else in equity or whatever else that can give me a return better than that? What is your take onto that?
So for me, ETF is the best debt investment in India. Okay, you get 8.5% tax free. So no debt investment can beat ETF. So at this moment, if you see, home loans are 7.5%, and ETF is, and you get a tax benefit of home loan. So you get around, I mean, the effective rate may come to less than 7%. Okay. So it doesn't make sense for to pay home loan and from ETF. ETF is giving you 8.5. So you are getting 8.5 and you will be paying home loan which is generating 6 point, giving asking you 6.5 or 7. Okay. So I would not withdraw money from ETF uh, and pay a home loan. I would certainly, so if someone home loan is eating up 30, 40 or maybe 50% of income, I would definitely like to bring that down. Okay. So it may not be rational to bring the home loan down, but it can be reasonable. Okay. So for sake of your peace of mind, okay. So even I much before I cleared off my home loan, even I knew that I will lose on my tax benefit. Still I paid it because it's a reasonable decision. You are out of you. There are a lot of pressure when you have a loan on you. So not withdrawing from ETF, but I'll try to pay as much as for any bonuses I get. I used to pay 10, 12 years bonuses I have paid in. So any bonus, any lump sum you get, you pay it. Let ETF compound at 8.5%, and that will create a huge wealth for retirement. So I won't touch ETF, but any other FD or something you have, I would definitely have to remove that FD or partial FD and pay it, but not ETF.
Thank you.
Also, Vijay, I'll just add into that. What
Yes.
you can look at into is, if your rate of interest is high on a home loan, you can transfer the loan at a lower rate. Now it is around 6.7 also. So if some like as Mr. Darshan told, if it is around 7%, post tax it will be around 4.9. If your salary is about 10 lakhs, 30% bracket, correct? So post tax net effect is 4.9%, and EPF you're getting 8.5, correct? So there's a lot of gap. And you saw the difference of 2 to 3%, how it compounds. Almost 8 to 9 CR was extra, correct, in that slide, which Mr. Darshan shared. So that is the kind of effect. So what you can do is basically you can see how, if you continue for a longer period of time and you get the tax benefit of extra 30%, 24B, it will help you in your tax planning also, basically. Like that.
I actually, why I asked this question, because after when I will get my EPF as a whole, the rate of a good house will also go high. So is it advisable that if I pay my that house loan with the EPF amount and the amount which I'm paying to home loan, start saving with the rate of, let's say, 12% or 14% smartly, as Mr. Darshan told in his slide?
So if Mr. Darshan can throw some light.
No.
So you are getting EPF money. I mean, you are leaving your job. That's what you said. That's what you meant.
Actually, I'm working in that direction. I'm looking very forward that after 4 or 5 years from now, I will see myself independent, starting with something at our own. So that house loan is something which is really paining me a lot. So I want to get rid of that.
If you are okay, this situation I didn't know. I mean, before leaving your job, you need to get rid of all your loans. Okay, that's what I did. So if there is no pressure on you to pay EMI as well as your expenses, because you are leaving your job and you are doing something else, there will be pressure. If you are moving into some other job, it's okay. I mean, you are completely moving out of job, you are doing something new, then you should be, then you should get rid of all the loans. So then it will make sense for you if you are getting EPF money and pay part of your home loan. I would still say try to pay the home loan without touching EPF. Okay, maybe you delay by, if you're targeting 5 years, then you target 7 years, but try to pay uh, out of your current salary. Okay, and let EPF amount come to you. That will be helpful for you. And it's nothing like all the money you get, you have to invest in the equity. You have to be very reasonable. Not, you cannot put everything in equity. So it's case to case basis. I mean, I'll have to, maybe we can talk in details later, and I can have little more data I'll have, then I'll explain. We'll be able to.
Got it. Thank you so much.
But try to before you are getting an ETF, try to finish off your loan.
Yes.
If you're not going into some other.
Yes. Thank you.
Any other questions?
Hi Darshan, this is Neelam. A quick question, and it was a wonderful presentation. Needless to say, everybody is mentioning that and was so useful. So the question is, while we are saying that we should invest in longer term, like for example, if I invest in mutual fund and I keep it there for say 15 years, but when I withdraw, I'll have to pay taxes over it. So is the rate of when we calculate the rate of interest and rate of returns, is that included as part of as part of the returns?
No, that is not included, but the tax part is not much. I mean, if you see on the income, it is 10%. Okay, so that returns what I have calculated is not, it doesn't consider that. So if you are so tax, if you're worrying about so tax, you can. One option is, which I'm not very fond of, but people do
withdraw and reinvest.
Yeah, withdraw and reinvest every year.
That's pretty tiresome. I tried doing that too.
That you can do, but I mean, to be honest, I don't worry about paying tax. I pay a hell lot of tax in equity investment. Okay, so the amount of money you will gain is so huge that you won't worry paying tax. But yeah, if you there is, I mean, it's not a big issue when you churn your portfolio. You book 1 lakh profit every year and you buy it again. So that is reasonable. I mean,
so it's like if you're making 1 crore of rupees, you're paying 10 lakhs. Isn't that big amount?
I mean, you won't be selling it all the at one go, right? So even if you retire, you will have something in equity forever. Okay, you cannot pull everything. I mean, you won't ideally pull everything in from equity and you will be using it, right? You will be slowly withdrawing. Okay, so then you will save on tax as well. I mean, you will be 1 lakh you will be saving every year. I mean, of course, you will have to pay something, but the amount of profit is so huge, you won't feel like. Actually, when you earn 1 crore, 1.5 crore, 2 crore, you are making profit 5-10 lakhs doesn't make sense.
Okay. All right.
But it's okay. You can sell and reinvest. That is okay. And you will not be pulling everything at one go when you retire. You will be pulling slowly.
Okay. Thanks for the explanation.
Also, I'll add one thing to that. See, whenever you if you see investment, no, it has to be relative, correct? So if you see the equity is one of the investment where you have lowest tax, basically. If you see other investment avenues, it will be directly added to your income. So if your salary is more than 10 lakhs or a 30% bracket, straight away you have to pay 30%. So post-tax returns are very low. So that sense also, if you see, you pay only 10% tax on your returns, long-term returns. So that way also it is beneficial, equity investing, long-term.
Yeah, it looks like it is more, but actually it is less. So you relatively what other options you have, that is also one thing. So I'll give you an example. When 2018, I sold my house. I was having one house in Pune. I did a calculation that I need to retire. I need to this thing. So that how I need to sell. So I sold that house and I put entire amount into equity. Okay. So when I went to CA for tax calculations, and CA was suggesting me, why don't you buy another house? You will save 5, 7, 8 lakh tax. I said, no, I want to pay the tax. I have a different plan, just pay it. So I paid 7, 8 lakh tax. Okay. So CA was like, I have never seen a
Okay.
person like you who is paying so much of tax for buying, selling a house. So let it be. I mean, I know what I am doing. I invested that. I know that. I mean, I knew that markets are reasonably priced and it's a very good time to enter. Now, in 3 years, I have doubled that money. Okay. So now, if I can buy 2 houses. What I sold.
Nice. That explains,
So
yeah.
yeah. So I mean, it was okay for me. I mean, I 5-7 lakhs. I paid it. It doesn't matter. I mean, tax basically never hit. So I have never. I paid tax every time. I have never given importance to tax, because when you give importance to tax, you lose out on a opportunity where you can grow your wealth. Okay, so that's the mindset I had. Pay the tax, but I want to create wealth. I had that mentality. Tax चलेगा थोड़ा बहुत दे देंगे, but wealth मेरा जाता नहीं.
Yeah, thanks for answering that.
Yeah.
Darshan,
question?
Ashutosh, one
Yeah.
question.
Yeah.
If somebody is starting, say, new, I mean, he has got a job and all that, from your experience, what would be some sort of a thumb rule? I mean, saving 30% of whatever he gets would let him retire maybe in 20, 25 years. I mean, assuming his lifestyle is within the means. I mean, whatever he's earning, he's managing within that. He's not, I mean, really a very lavish spender. But is there a sort of thumb rule? I mean, you save 30% and what is that good rate of saving or investing?
So 20 to 30% is what is expected to invest every month. Okay, and that habit has to be there. क्योंकि अगर वो habit from the day one when person get a job, वो habit बना रहा है ना, तो he will be able to create a lot of wealth. So as a thumb rule, we can start with 20%, 30% investment every month, and once he has invested, he got enough amount, then he would need a proper planning as per the goal. But for starter, just blindly invest 20-30% every month. Okay, but he need to calculate at some point of time whether that how much he's investing is going to really help him in his retirement, whether he will be able to survive. That one point of time, that decision has to be done, taken. Okay. But for starters, it is okay. 20-30%.
Okay.
So again, I mean, behavior is very important. I'm telling you, there is, I mean, 20-30 years back, behavior was not, I mean, it was important, but we didn't have so we didn't have information. So fund managers, or maybe like people like Harshad Mehta and lot many other people, other fund managers and other high society people, they had information, okay, which no one knew. I mean, we didn't knew that what that company is going to do, what is, even still we don't know, but it's not that 20-30 years back. Okay, so we didn't have an information edge, but right now there is no information edge for the fund managers. Okay, so whatever information flows within second, everybody in India knows, everybody in the world knows. Okay, the only edge right now is the behavior edge. So we are all competing with each other. So I am competing with the other investors. If I make money, other lose. Okay. So you have to have a proper behavior. If there is a crash in market, you get scared and you move out, you make a lot. I mean, in long term, 20-30 years, you lose in crores of money. Okay. So if you don't understand, stay calm, stay invested. Okay. Don't try to time the market, because no one in the world can time it. If at all you want to time, maybe 20-30% you should time. I mean, I don't, even I time 20-30%, 20%, 10%, 20%, I try to time it. But again, this is a whole full-time activity to me. I am in touch with fund managers. I have a lot of information advantage. I get to know a lot of data from fund. So it's reasonable for me, but people who are not in touch with fund have this information, then probably don't try to time it. Just stay invested.
Yeah, hi Darshan. Actually,
Yeah.
Well, I mean, that was a very good session and very useful information from questions as well as your session. So what I wanted to ask is basically, see, I mean, I have invested in mutual fund, which I feel probably, I mean, I have invested in it for last probably 4 or 5 years, but I see that the probably return is not that much. So what should be your suggestion? Like, I mean, should I move out, or how should I move out? Like, should I get this lump sum, or what should be the plan basically?
So you are investing, doing a SIP for last 4 or 5 years.
Correct.
And you are still don't, what is the amount of return you are getting right now?
Probably from
CAG.
last, yeah, I mean, not CAG, right? I don't know, I mean, probably 20% increase from 5 years. So that's what.
Okay, I think you must be having 20% CAGR, because all the mutual funds, most of the mutual fund, not all, most of the mutual fund is giving more than 15-20% return. Who has invested regularly in last 5-7 years. Okay, so 20% CAG annualized is very good.
Okay. So okay, fine. Maybe no. Actually, it's a consumer based mutual fund, basically consumer food based mutual fund. So I was thinking probably this is the return itself is not that much compared to other categories.
So you have bought a thematic fund.
Correct.
So never ever venture into any thematic fund. Never. Okay. Pure diversified mutual fund. Never try this. People, what normally happens? People see the past performance. Okay. So someone who, I mean, a lot of people invested in 2017 this pharma fund. They have not made money 3-4 years. Okay. So mutual fund past performance you shouldn't look at. Take it seriously, especially in thematic. In thematic, something has worked for 4-5 years. It will not work in another 4-5 years. So invest in diversified. Don't try to be a fund manager.
Yeah.
Okay. What you have done is you have tried to become a fund manager. You have decided where I should invest in. No, let fund manager do, because they are doing it full day, right? What information we have, what analysis we have. Let them do. Invest in diversified mutual fund.
What should we plan of exit now, basically?
You should get out of thematic fund, sir.
Okay.
And invest into a diversified fund. It can be a multi-cap, it can be large cap, it can be small cap, based on your risk appetite and other funds.
Okay.
No thematic investment. Never.
Like one best example which comes in my mind is 2007 beginning is infrastructure fund.
Yes.
So still I see people, they have not come up to their cost also. Infrastructure. Almost 13 years now.
So even if you would have, so I'll tell you, even if you have made money in consumer or in a thematic fund, you are just playing a Russian roulette. You clicked on the trigger, but fortunately it didn't hit you. But one fine day you will be hit.
Yeah, I understand that. Yeah.
Okay. So it is. I mean, that those person who get failure, instant failure when they are doing the wrong thing is the luckiest person. Okay. So someone who has been successful in doing the wrong thing is the most unlucky person. Okay. So you are lucky that you got a failure in the initial stage of your life, and you got to realize, I shouldn't be in thematic. After 10-15 years, you would have realized this. You would have made a huge loss. Okay. So you are lucky that you realize it quite early.
Okay. Thanks for that.
So Mr. Darshan, we have one question from Mr. Ashok. Can you a little bit elaborate on IQ and EQ?
So IQ is basically intelligence quotient, and EQ is your emotion. Okay. So people who are intelligent and they don't have an EQ. There are a lot of people who are a lot of my friends who are earning 5 lakh, 10 lakh a month. Okay. And they are earning 5-10 lakhs a month. Obviously they are intelligent, but their behavior is not. I mean, they get scared when the market goes down. Okay. So one of the example I'll give, one of my biggest investor, when market crashed in March, I used to keep calling people to invest more. Okay. So I called my friend who is earning 5-6 lakhs a month, And I told him the market has gone down. I called in May or May end or something that let's invest more. So he said, I was about to call you to sell everything. Okay, because economy is very bad. Okay, so he has a good IQ, but he doesn't have an EQ. So I said, no, I'm not going to sell your mutual fund. So what he did, he was 30-40 lakhs he was managing himself. He sold. He was having his own investment. He was managing himself. He sold everything, 30 lakhs. Okay, and I didn't sell it. So I made, and then market went up and market went twice at 2.5 times. So basically, he must have saved 20-30 lakhs from I stopped him selling. So that's an example. Low EQ. Emotionally, he was not up to the mark. He has a high IQ. So low IQ. Did he make money? No. Of course, I mean I stopped him. He was able to make money. But if I would have not stopped him, he would have made no money. He would have made low, in spite of high IQ. And someone who is low IQ, okay, he's not intelligent. He doesn't understand math. He's earnings are very less. But he's just investing. He doesn't care. He doesn't look at mutual fund what returns I'm getting. And he doesn't, market goes enough, he doesn't understand what it is. He will make a lot of money in 2013. Okay, so he has got a good EQ, he will make money, even if low IQ. But someone who is high IQ will not make money. So I gave you the example.
So it should be balanced one, Darshan. It should be balanced one, or it should be like more weightage of EQ than IQ. How it
More EQ should be the max he can.
I think
If he doesn't have an EQ, at least he should trust someone who has a better EQ.
I think Mr. Darshan gave an example also, like of Mr. Warren Buffett. Like he told 1% IQ and 99% EQ is what.
EQ.
So you can, that can, like someone person like Warren Buffett is telling about 99% EQ. You can understand the importance of emotional quotient.
So yeah, so balance EQ is what is the max EQ. Okay, balance EQ. A person who is emotionally balanced is the best thing to do. He's utilizing his EQ as a max.
Okay, thank you.
So you should not fear. You should not
So,
get worried. You should be brave enough, or maybe don't care type of person. Your emotions should be in balance. Yeah, yeah. Neil.
So I'll just summarize whatever Mr. Darshan has told into this presentation. Some important highlights. One is like, of course, recently we discussed IQ and EQ. Second is like what everyone gets questioned, like 30-40 years if we invest. When we withdraw is whenever you have goals. So whenever we do financial planning, you have a goals for all those things and you can withdraw on all those points. So it's not like you withdraw the whole amount at the end. Okay. And second, at the end also you don't withdraw all because you keep compounding the money, whatever is there. Because if you withdraw everything, then how you compound, correct? Then how you take care of your expenses, day-to-day expenses. So you keep stay invested, and whenever you want, you can withdraw. Okay. Second, regarding inflation, always real inflation is high. So better find some instruments where you get high return more than your FD returns, so that you can beat real inflation. Then third most important point which I observed is inactivity. I think very important point which I have personally also experienced in my life, where I have done some investments, and today I think if I would have left it like that only as an inactivity, you would have fetched much higher returns today. So that is one very important key takeaway is inactivity. Okay, so if you just stay invested, it will really help you actually long term. Okay, and one more important point, fourth is from his last slides is that not only making money, how hard your money works, but how many generations you keep it, that money. Okay, so one is your money is working very hard, but at the end of the day, you want that to give it to your future generations, correct? So if you give the right knowledge, if you impart the right knowledge to your future generations, it will definitely help them to grow for a long period of time in your future generation also. So make sure you start early, start educating your kids, your family members right now, And if you have already delayed, you can join so many new sessions and all. Ask them to participate. So that is how your money will grow to next generation also. Correct. Very important point. And one more thing, in financial planning slide, I saw one point was insurance. So this we personally feel like many people do a lot of investments, lakhs and lakhs of investment, but they miss insurance. And we get calls from people where just because of an insurance, they have to take a personal loan or a mortgage loan to pay for a medical insurance, or someone is not there in the family, an unfortunate event in the family, and then the whole family is burdened with a lot of debt. So very important to have an insurance. If just before you start anything, I think it's very important to have insurance in your a wall of, like, it acts as a wall of defense against any uncertain event. Okay, so these are few takeaways which I think you should just recap in your mind. And I think Mr. Darshan wants to add at the end.
No, I think that thanks for summarizing. I think that was enough. Yeah, I mean, everything you should I mean, one of the thing I liked about Morgan Housel, he said you have to be very aggressive when you know, start building your portfolio or maybe your wealth. Okay, once you have built your wealth, you have to be very defensive. You have to protect it. So to protect your wealth, there are a lot of things, like insurance is one of them, is required, very required. If you happen to, if someone got ill and it's a hospitalization and you don't have insurance, then you spend up most of your wealth in that. So it is very important you protect your wealth. You should do everything to protect your wealth. You should not be very aggressive once you have already built, and provided you have a limited resource. So yeah, I mean, I think good point Neeraj has covered. Any other questions? Someone, you can write mail, you know our mail ID. So you can write a mail, or you can call Neeraj or me. Any queries you can, I mean, if we were not able to answer it, you can ask us. Thanks a lot. I think, yeah, 40 minutes.
Darshan, thanks.
Thank you, everyone. Thanks for joining the session. We'll keep doing such sessions in future also. So please, I'll upload this in YouTube. So please share with your family and friends. And I'll share Mr. Darshan's number in YouTube channel below that video. So if you have any doubts or you want to ask any questions, you are free to call him, and you can also mail him.
One last statement: whatever has been taught in this session, if you follow, no one can stop you. 100% you will get financial. Yes, no one can stop. You have to follow everything. Okay. And I have followed it, and I mean, a lot of people already know me. Okay. So I have followed it, and I have achieved.
And I think we are getting very good feedbacks also from. I think Mr. Darshan got a call last week also from one of his friends that his goal was to retire after some certain years, and now, based on the financial planning which was done by Mr. Darshan, now he can see he will retire some 4 to 5 years early, basically. I'm right, Mr. Darshan?
Yes.
Yes. Right. So, yes. So that is what you should. If you follow, definitely you can see the goals achieving.
Yeah. Thanks a lot, Darshan. Thanks a lot, Neeraj.
Thank you for joining.
Thank you.
Darshan has helped me also. Thanks, Darshan. In retiring early.
Yeah. Thank you so much. Thank you.
Thank you. Bye.
Thank you.
Bye.
Take care. Take care, everyone.
Bye.
Thank you.